Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for August 20th, 2025. I am on the road tonight, so I don't have my usual tools and sound devices, so if there's any issues with sound, I apologize. Um, I call this one hammer time. They bought the dip, now what? Yesterday, before I did my course, I called the market. The video was called Will They Buy the Dip? And they bought it. But I don't know what happens next. We'll talk about that tonight. Again, marketmripro@gmail.com, and we'll talk about my Google group in a second. Any and everything I do is for education only. I do these videos to teach you how to use my tools for top-down analysis. Trading involves risk. You alone are solely responsible for any investment decisions you make. Trading stocks and options should be considered risky. You should always consult with your financial advisors. And I have tools in multiple platforms. My Google group is called Top Down Trader. I welcome you to join. It's free. You get extra discounts on my tools. You get education programs that I don't invite to everybody, and sometimes I forget to stick the video on YouTube. Just go to Google Groups, look for all groups, look for Top Down Trader, let me know how you want to be contacted, and you can bail anytime. My Palm Beach Gardens video, somebody pointed out I have my dates wrong. I am, as it says here, Sunday and Monday, which are October 26th and 27th. Come in Saturday. The meeting starts 8 o'clock Sunday, ends 5 o'clock Monday. You'll get breakfast and lunch both days. We'll go on a dinner cruise on Stocks and Docks, the yacht, on Sunday Eve, catered. Marriott Palm Beach Gardens, 2 days packed of education and one-on-one software instructions. Come and do a double header. Go see John Person Seminar October 24th and 25th, which is a mile down the road. If you come to my meeting live or online, you'll get a $400 coupon, virtual coupon you can use for any of my tools that won't expire for 12 months. And it's $155 a night for the hotel, $1250 for the meeting. Thanks to those attended live, my office hours, it was 2 hours and 15 minutes. I spent a lot of time on Market MRI Pro. If you own Market MRI Pro, if you're thinking about buying it, I highly suggest you find the video. Just go to YouTube and look it up. But you'll really get deep dive into how I use the product. Thursday, we got jobless claims. We've got the Philadelphia Fed Manufacturing Survey, PMIs, home sales, a lot, and leading indicators. And we're also going to start dealing with the Jackson Hole meeting and the Powell speech. Earnings-wise, Walmart at the open, that certainly could be market moving. And a number of other things. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. The E-index, yesterday we talked about how it had really broken down hard. Sorry about that, touchy mouse. But I also said it hadn't really broken below the chandelier. Well, it broke below the chandelier and then had a hammer. So this is an interesting potential reversal scenario. My expectation is it'll trade up to the 50 and fail. And I might expect the same thing for the market. I don't think we're necessarily done with this yet, but I thought this was interesting enough to show you. So as far as I'm concerned, the E-index has told us the market's at risk of rolling over here. If you have technical issues with Market MRI Pro, coding at marketmripro.com will get you Praveen. If you want to talk about ordering it, what your price is, anything else I have, just reach out to me at marketmripro@gmail.com and consider joining my Google group. Now let's take a look at the charts. So let me save that. Put it up. So I start with the daily briefing. You can see Bitcoin bounced today. It's been off the last 5 days, 7%. Today it was up 1.11, finishing at the top of the range. Diamonds was the only ETF on the indexes that was up, but considering where they were in the day, they all had significant rebounds. Dollar was down 0.7%. Spider was down 0.27, 0.35 on the Russell, 0.39 on VIX, and 0.59 on the Qs. So this is to me, a win day for the bulls because of the reversal that we saw. And even though you probably didn't make a lot of money if you're long, if you're still long, you lost a lot less at the end of the day than it looked like you were going to lose. If we look at the new high, new lows, we've shifted to negative on the NASDAQ. And we are still positive on the NYSE, but clearly the number of new highs has been dropping at 52 weeks. Looking at the S&P 500 sectors on the day, Energy, staples, healthcare, financials, real estate, utilities were positive. Materials were kind of break even. Leading to the downside again was communication, tech, and discretionary. So another risk off day with a move towards defensive plays. If we look at what themes were working, um, marijuana, gold, silver, Norway, which is a mineral economy, gas exploration, energy infrastructure, Southeast Asia, defense, and then the numbers come down. I always look right over here, 40% of the S&P 1500, we're at 42% of the NASDAQ, 42% of the NYSE. So more than half the stocks in the U.S. market were down. So it suggests that it wasn't a great day, but like I said, big recovery in the indices. If we look at the timing model, you could see that recovery. You could see a classic hammer where the market opened here, traded all the way down to here, and closed back here above the 50. So on the daily timing model, we have lost the bongos on 3 of the 4, but the only one that's closed below the WMA is the Qs. And you can see on each of these, sorry for bouncing around, I'm not at home with the mouse pad, etc. Hammers on the Qs, hammers on the Russell. The diamonds really haven't broken down. So still sell signal on the Qs, buy on the others on the daily. And when we look at the weekly, we can see things are a little slow in the hotel. Apologize for that as well. You can see that prices are still way above the WMA and the bongos have not switched. So we remain with the longer term signals are still say to be long. The short term are mixed. And I think there's enough supporting evidence here with the recent sell-off that we have to be concerned on the market. If we look at the U.S. index charts, you could see hammer on the spider. I thought that the downside risk was 50. Maybe this is a reversal candle. You could see a long tail here, hammer after this sideways move when we turned up. This is a reversal candle, so we'll see. But don't forget, as we've been looking at all week, seasonality is not our friend here. That's 10 years worth of seasonality on the spider. The Qs, again, if my target's a 50, we got close with the hammer and we bounced. It's bad seasonality, but that's a reversal candle. If we look at the diamonds, really hasn't sold off. This one's held off better than the rest. 30 large cap stocks, and you could see, I hate when I do that. Let's go back to this. You could see on the Russell that we broke down below this trend line, but we also have the same type of a bottoming tail, and it's sort of living on that yellow line, which is, I believe, let's see what that yellow line is. It's an EMA, which we want to take out. Something I was playing with. And there we go. So still well above the 50. Volatility, you would have thought with the market as bad as it was, it would be higher today, but just 0.77. And the dollar, which is something we've been watching to see if it breaks out of this recent range. Make the dollar bigger. Look at year, 1 year. You could see that we're sort of consolidating here under this line. So not a big change there. On the commodities, silver, gold and silver were up a significant. Gold up 1%, silver up 1.65. Oil up a little bit, so a move into commodities today. Natural gas is still dead to me. And another day where our 10-year and our 30-year trended down just a bit. That's a good thing. If I look, oh man, I got to stop with this wheel. If I go to the buckets, again, we're neutral. Not going to say much more about that. Does not give me a signal. If we look at market breadth and we look at just the last couple of days here, we could see that stocks above the moving averages right here are kind of in the middle of their territory on both, no signal. You could see that new high, new lows positive on the NYSE on the left, negative on the NASDAQ on the right. You could see that the AD line's negative on both, and the up-down volume barely positive on the NYSE, negative on the NASDAQ. No other new signals. What I think is interesting is where the NYSE is trying to come back up, where we had a bigger fall today on the NASDAQ composite, but a big hammer. So hammers everywhere. Hammers typically are reversals. If we look at the bigger market breadth chart, we could see that the large cap spider still has a problem, and that 92% on the 13-week high low is a big number, and one that I wouldn't be surprised for it to pull back some. You could see how much on the NASDAQ composite, it's not 0.36. You can look at the Russell, it's 0.52. You can look at the S&P 1500's down a little bit, 0.83, but that 0.92 is still a big number. And when you look at the charts, the spider really hasn't fallen off that much at all. So still perhaps some concerns here. We still are working off whatever the impact will be from the Hindenburg Omen signals that we had back here on the NYSE. So I'll summarize as I always do. I think my guesses were higher at the end of the year than we are today. Futures were not great, but they might sell off over after hours and do another intraday reversal tomorrow. I'm not sure we're done with this pullback. Certainly liked how today performed. My guess is, again, that we will go back on to challenge highs, but I'm not sure we don't go lower first. So we'll see what happens. I might use any recovery as a chance to lighten up on any remaining long positions and raise a little bit more cash. If we go back to the ratio charts to see if anything's really changed today, you could see how staples over here has moved up a lot, as has industrials and utilities and real estate and healthcare. Those are some of the more defensive plays. Discretionary's held up, but communications has come down and tech has weakened as late as well. If I go to JS layout, it's late tonight. You can see the list is now down to 3,599 stocks. I'm afraid to give lots of buys or sells in a day like today because I think the market's going to bounce here and then take a deeper dive, but it may go down. It may go up to new highs. There's so much question here. If I give you a list of longs or shorts, it's probably not doing you any favors. Let's wait and see what direction the market takes. I will very quickly do my favorite list, which is that 2-day momentum up, because there is one, and it's on the screen right now, that I think is the kind of stock that I look for in the current market environment. So 2-day price up, 35.99 will go to a grand total of about 6. ARX is a IPO, so I don't know anything to say about this except to say it made the signal because of these 2 dots. It didn't have one today, so I'm going to have to ask Praveen why. Oops, my bad. It has 3 in a row. It was on yesterday, so that's interesting to me, but I don't usually chase IPOs unless I know something or it's a real hot one. This one's kind of looks like it's going sideways. Data-driven risk exchange platform for specialty insurance. Do your own research. I can't give you enough. ITOS is looks like a buyout, so I'd go over here and see if there's any lawsuits. Yep, it's a buyout. There's always lawsuits and buyouts. MH is another new IPO, so I'm not going to say much here. WPC is a well-known REIT. Let's see if when the earnings are out. It pays a 6.3% dividend. It had a small surprise on earnings and revenue. Steady Eddie on earnings and revenue. Any news on WP Carey? 3 absurdly cheap dividend growth stocks that yield more than 4%. Well, that's pretty cool, being called obscenely cheap. 5 stocks with solid shareholder yield to safeguard your portfolio. So there you go. Here's a safe stock you might consider. Let's look at it over a longer period of time on the weekly, and you can see it sold off on the weekly as well. Well, the daily does look like it's recovering here and breaking out. It had, oh my God, by design, this is sensitive. When you're not on a mouse pad and you're not using your usual mouse, it becomes painful. Let me get back to where we are. Okay. Nice uptrend, pull back here in a breakout. You can see seasonality looks neutral, then it gets bad. That's something to think about. It did have two momentums in a row and a breakout today coming from a squeeze with relative strength and OBV breaking out. I have no trouble chasing that even with the seasonality. I just be careful with my stops. Um, YMAT is another IPO, so let's skip that. The one I really want to talk about was Core, and let's give you some more data on Core. So Core is the old AmerisourceBergen. It's in the same group as McKesson and Cardinal Health. It pays a little dividend, a little bit less than 1%. It is a steady eddy on earnings per share growth and on surprises and revenue growth. One thing's for sure, drug costs keep getting more expensive. As long as that's the case, then those three stocks, Core, Cencora, Cardinal Health, which is CAH, which is in a little bit of a pullback, and McKesson will do well. Cardinal pulled back because there were some earnings concerns, and McKesson has pulled back. Well, so did Core, but Core is now moving after its pullback. These are three stocks I like in a tough market environment, and I think we're going to be in a tough market environment, especially if we have stagflation. So here we are breaking out, two momentum dots in a row, and I got to make this list. Two breakouts in a row, relative strength crossing up OBV coming out of a squeeze. It's one of my favorite setups. Big uptrend, pullback, and breaking out above the 50-day moving average. Again, August and September are not great, but look what happens in October here. So Cencora, COR would be the stock I'll be watching tomorrow. But I'm going to be doing maintenance on my portfolio, both the longs and the shorts. But I may still look at playing something like this. Have a great day, and probably do a longer report tomorrow. I'll be back home, and I won't be getting up at 4:30 in the morning. Bye, everybody.